Schwab Advisor Services is a proud supporter of the RIA Edge Podcast and independent financial advisors like you. When it comes to your independence, Schwab Advisor Services is all in. They provide industry-leading custody services with no AUM minimums, no custody fees, and digital onboarding for starters. With Schwab, you'll be backed by some of the most passionate folks in the industry with over 35 years of experience helping firms of all sizes. To learn more about everything Schwab can do for you, visit advisorservices.schwab.com.
Hi, everyone, and welcome to the RIA Edge Podcast. I'm David Armstrong. This is, as you know, my chance to speak to executives and decision makers at wealth management firms who are growing firms that we feel are sustainably growing as opposed to just wafting ever upwards on AUM appreciation and doing so in a way that doesn't erode the client experience. So sustainable growth, we talk about it, or growth by design and not by default. Today, I'm thrilled to be joined by Susie Cranston, who is the President and Chief Operating Officer at Cresset. Susie, thanks very much for joining us.
Well, thank you for having me, and I'm looking forward to our conversation today.
So for the folks who don't know, maybe you can just start off by giving us the 101 of Cresset. I think most people are familiar with the firm, but for those maybe who aren't, where are you guys at these days in terms of offices, AUM, home office, et cetera?
Yeah. Well, so today, Cresset is a 8-year-old organization. It was founded by Avi Stein and Eric Becker, who were two retired private equity executives who had their own family offices and were looking for the right family office together, realized that they couldn't find what they wanted, and so they decided to build their own firm. So we always say that Cresset is founded by clients, built for clients, and it has been a really fantastic journey. So today, from that start of their two family offices coming together 8 years ago, we have 22 offices nationwide. We have $65 billion of assets under management, and we have a team of almost 500 professionals that are working hard every day, eager to serve our fantastic clients. So we do tend to work with ultra high net worth clients. We have also had a lot of success working with other founders. And it's been a really fantastic experience over the last year since I've joined, for sure. But to talk to our most tenured employees, it's an organization that culture is really at the cornerstone. It has always been one of the founding principles that we value culture and our people. And that has really, I think, paid dividends in terms of the organization that we all enjoy today.
You know, I was I guess to say how long I've been here, but I remember when Cresset launched 8 years ago. And part of the, I think the excitement of the story at the time was that this was largely a multifamily office approach, right? From the founder's own needs, for one. And then also, opening up to other high net worth and ultra high net worth investors with, obviously the investment chops, but also the entire kind of multifamily office service offering. Is that still accurate, would you say?
Yes. So you are spot on, David. The family office services is one of the core pillars of what we provide for our different clientele. And, it's interesting. Family office has become such a hot sort of topic in our space. And so a lot of times people use that word and the question is, well, what does that actually mean, right? And so for us at Cresset, we have a team of over 60 people, and they are really focused on delivering against a client's full set of needs. And so that could include anything from banking and lending support. That could include bill pay, partial CFO or full CFO services. We have travel and planning. We have family governance, philanthropy advisory. Obviously, tax and strategy optimization is always a core piece of it. I think we have, almost a dozen, former practicing trust and estate lawyers. So we have a full range of services. And it's interesting because when I think about, now I don't want to age myself, but a multi-decade career in wealth management. And, when you think about kind of the very early origins of our business, it was, you have a stockbroker who could sort of pick the right stocks for you, but, we didn't have E-Trade, you didn't have a way to do that yourself. And then as that started to evolve, you had advisors who took fiduciary responsibility for the assets and really, acted as fiduciaries allocating across the portfolio. And then I would say, 10 years ago, kind of adding financial services on top became really critical because, it was a big way of understanding if you were allocating correctly, that you had a clear financial plan. And I really have come to believe that family office services is sort of the next wave of what our clients really need. One, because it gives people back time in their lives, which is always a very scarce resource. But two, when you think about the ways that you add value for a client's life, I mean, we have a whole section of family office services, for example, that does tax. And, generating tax alpha is a guaranteed return, right? So for many reasons, the family office services that we provide are really vital and I think have really helped grow Cresset and continue to be an important part of our strategy going forward.
Yeah, and I want to speak about some of those extra services or the additional services that are there under the roof. But first, a little bit of your bio. You've been there at Cresset about a year, I think, as of April?
Correct. Yeah. Friday was my 1-year anniversry. So
yeah,
it's
that's
been over a year now.
And I know from First Republic, and we don't need to go into all the history there. We know that there were a bunch of macroeconomic reasons why there were a few banks that kind of struggled there for a while as interest rates were rising so rapidly, and what this did to not just First Republic, but your bank, but Silicon Valley Bank and some of the others. We can leave all that aside, except for I wanted to ask you this: your personal reflections on a wealth management firm versus one that sits inside of a bank versus one that does not sit inside of a bank. Do you have any kind of thoughts there, or has this been an easier transition or a harder transition?
No, it's a great question. It is, as you would expect, something that I reflected on a lot. And, so for most of my decade at First Republic, I was running the RIA business there. So we grew that business, I think, from was about 20 billion when I joined and to about 250 billion. And, so I had a very, long and interesting run watching what it was like to build an RIA within a bank. And, coming out of that experience, I think one of the things that I have really started to think about a lot and really internalize is that when you think back to those value-added services that I was just talking about in terms of, helping do clients' taxes so that they have tax alpha, or, private investing has always been, one of the core pillars. A family office is one core pillar that we believe differentiates Cresset. The work we do in private investing is another. And having worked with some of the wealthiest clients, in the country, not just at First Republic, but then also I spent a year at JP Morgan prior to joining Cresset. Mm-hmm. And one of the challenges when you're serving a wealth management client from a bank is that there are kind of compliance and legal restrictions on what you can do with those clients if you're going to serve them from a bank. So, for example, if you want help with a private investment that you as a client sourced and found yourself, it can be very complicated for your bank-based advisor to be able to give you perspective and advice on it because it's considered selling away in many cases, which is against the rules. So, when you think about all these value-added services that the wealthiest clients are looking for, I think it is going to be challenging for banks to provide that full range of services. And not to say that banks don't have a fantastic and, very important role to play, but when I think about what my most discriminating wealth management clients are asking for from us, I think it would be hard to do in an environment that is regulated the way a bank is. And so I think that's why you're seeing so much growth in the RIA space, right? I was just looking at some McKinsey research the other day that has RIAs at, I believe, something like 8 trillion in AUM, and the wirehouses or the banking affiliated firms have 9 trillion. But they expect that will actually shift potentially this year because the RIAs are growing at 13 to 15%, and the wirehouses are growing at more 5 to 7% rate. So it'll be interesting to see kind of how the industry continues to evolve. I think we're definitely seeing some generational shifts happening.
When you came to Crescent, and you were obviously speaking with the founders there and the board, what was their mandate for you? Obviously the growth opportunity is here on the RIA side, as you've identified, and the services that Crescent brings to clients are probably further along than I think most RIAs have. What was their mandate? How do you see your objective there?
Yeah. I mean, I would say that the mandate comes in sort of, several flavors. I think the first and foremost at Cresset is that, as I said earlier, we were a culture first firm. Our business cards literally have our cultural values on it. And the idea and the ethos of Cresset is that, we're all collectively building the house we want to live in. And so the number one mandate was, making sure that we preserve that culture as we continue to grow, which I was very excited to do because I really believe culture in a professional services organization is one of the most sustainable ways that you can, really make sure that you're delivering for clients day in, day out. The other two mandates I would say were one around continuing to mature the operating platform. For whatever reason, I have had several experiences in my career where I've had to consolidate and scale operating platforms. So I mentioned, spending 10 years growing a business from 30 billion to 250 billion. And when I joined there, we had 7 different performance reporting systems, 4 different billing systems, 3 portfolio management systems, figuring out how to sort of seamlessly create one integrated platform without disrupting exceptional client service is a skill set that I think is really helpful when you're growing and scaling RIAs, in particular because the CRM that you can afford and that makes sense when you're a $10 billion RIA is often different than when you're a $100 billion RIA. And same is true for almost every element of the operating platform. So there was a second mandate that I was given around making sure that we built a really robust and scalable operating platform, which fortunately, we had a great basis and we're continuing to do. And then, thirdly, continue to support our clients as we grow. I think a lot of times people think that, if you're growing, it means that you're, doing massive acquisitions or, out there with some sort of, agenda that you're going after. And the truth is, if you're successfully delivering great family office services, wealth management, if you're delivering for clients every day, you are going to be growing because your clients will be growing, right? And so the growth is coming in many, many forms, but we want to make sure that we are well positioned to make sure we're seamlessly growing with our clients and continuing to deliver the exceptional service that they've come to expect from us.
Right. And explain to me then a little bit about the pieces here at Cresset. There was Cresset Capital Partners, which I believe renamed themselves Peakline Advisors. Peakline?
Correct. Yes. So when Cresset first began, the availability of private investments was more challenging to find a volume of private investments for our clients that we wanted without having more of an in-house capability to do that. So Cresset Partners was sort of created to help us source and put together private investment opportunities for clients. And as Cresset continued to grow, the volume for these private investments was really outpacing what one firm could do, and we always had built the platform to be agnostic. So even though Cresset Partners was one option that we considered for clients, we always did look holistically at what was out there to figure out what the best fit would be. And so as we continued to grow, we realized that it would probably be best to have Cresset Partners rebrand and become Peakline and be a firm that could serve multiple clients as more of a private equity structure. And Cresset is now a very focused RIA handling the investment and family office needs of our clients. So we still have a lovely partnership with them, and that we continue to work closely on and invest with them in many, many ways, but they are now a separate entity.
Yeah, it's interesting. I'd be interested in your thoughts on this. The notion of a fiduciary RIA being open architecture, putting clients in the best investments they possibly can for their situations, versus the need, I think, for some RIAs to have a differentiation in terms of their investment options,
Yes.
and maybe there's a reason that clients come to one particular firm because the investments available there are not available at the same RIA down the street or a different RIA down the street.
That's right. And so here's the interesting thing that we found is that, as Cresset has continued to scale, the opportunities that we have access to, have understandably, and, as you would probably expect, really significantly evolved. And so I think, to your point, one of the other real benefits that we have seen for Cresset with our scale is that we are really able to provide as you said, exclusive access, exclusive deals that we pass on 100% of the benefit to clients for. That has really been exciting for us to sort of see, and really helped us realize that in a world where scale is becoming increasingly important for many reasons, it is, part of what we think allows us to deliver for our clients in the best way possible.
Is the ambition there to pause on growth and wait until kind of the platform gets stitched together or updated, or is it still very much a road to growth even while you're building the plane?
Yeah. So Cresset has done a really great job of keeping the platform integrated. Unlike, I think, some of the other firms out there that are doing, multiple acquisitions a year and maybe have more of a aggressive acquisition strategy. Cresset does 1 to 2 acquisitions per year of size. We also do lift outs from brokerage firms, but that's different in my mind than the work and affiliate associated with doing an acquisition. Mm-hmm. And we, spend a lot of time figuring out how we're going to integrate the platform so that we do have one platform. That is something that I feel very strongly about, having spent a decade integrating in a former life, because, if you think about the benefits of scale, going back to what we were just saying a second ago, if everybody's on different systems, then any one improvement you roll out only impacts a small portion of the population. And you have to sort of spread your investment across all these different places, not to mention that if you think about an operating system as a unique combination of systems that you use to get the job done day to day, the more operating platforms you're using, that number becomes almost, exponentially large as you start to give, multiple options at multiple phases of the value chain. So, if you have 3 different performance reporting systems, 3 different billing systems, and 3 different rating systems, then, together that's not just 3 different operating platforms, that can be 9 different operating platforms, right? So we do make sure that, our platform stays scalable. And going back to the scale, what's really nice is that, I would say all of our core tech infrastructure is really industrial grade at this point. And that is a lovely place to be because, when you're smaller, it can be very expensive to have the industrial grade solution in place. This has allowed us to really, have those best in class solutions at every place. And now, have big investments in cybersecurity, big investments in AI, which I think are going to be really significant strategic considerations, even more so than they are today in the coming years.
And do you how do you make the decision about, building out a tech team in-house to do the tech work or even some of the development work versus the off-the-shelf, stitching together the off-the-shelf solutions that are out there?
Yeah. Well, it's interesting. So I'm a big believer that one of the things that is most challenging and most expensive in the RIA space is when you have to integrate multiple systems, when you have to be the one building those integrations. It really slows down your ability to grow and scale. And so I always look for solutions that are industrial grade and have pre-built integrations. So, for example, Salesforce has a number of pre-built integrations. That's one of the things that I always look at when we're making vendor selections. Where is the integration already done for us? I look for solutions that have the pre-integration as a consideration before we sign the contract. And then I think it is important, as soon as firms can afford it, to have tech people on site who can help operate and run those systems, right? So one of the things that I have seen be challenging in previous lives is when you have a consultant come in and do something, but then the consultant changes out and then you're back to square one. Having technology professionals who understand your business, who understand your clients, really allows you to, one, make sure you're taking advantage of the technology in the best way you can, right? So, one of the things that I think commonly happens is we install a solution, but then we don't go back and make sure that we're taking advantage of all the functionality and all the features. And so we leave value on the table. And I think having your own tech team allows you to do that. Secondly, there are always things that come up, and upgrades, those kinds of things. And so again, having somebody that knows all the back history, knows where, certain customizations were made, I think has been, again, a really important advantage when we can do it. And, in times where we can't, there's an additional cost that has to be factored in.
So you use Salesforce, and I'll just ask any other platforms that you care to mention that the Cresset?
Yeah. Yeah, no, we use Salesforce as our primary CRM tool, and that has a lot of great pre-integrations built in. Adapar is our performance reporting tool. I've worked with them for a long time, and they do a really great job. And we have Snowflake for our data. I think a lot of people are using Snowflake, so that's another kind of common industrial grade version. So those are the types of platforms that we know can scale, that we know can deliver what we need day in, day out.
Yeah, that's interesting. You said more firms are using it. It's probably true. More firms are using it, but I think you have to be a certain size to use Snowflake, from what I understand. But, yeah.
That's probably true. That is definitely true. But that's a classic example of what we were talking about earlier, where what you can afford when you're a smaller RIA versus what you can afford when you sort of get to the final. I call it the final upgrading, right? When you cross the chasm and you're able to afford the industrial grade solutions on every element, and that actually is a real advantage when you can cross there, because then you don't have to change out your infrastructure. You can just scale on what you have, right? I think having been through that kind of 20 billion to 60 billion growth trajectory now several times, it's really around kind of the 40 to 50 billion mark where you can start to put industrial grade solutions everywhere. And then that makes the next, 50 to 150 billion of growth a lot easier, because you're not also changing out systems with the growth, right?
Yeah, no, that makes total sense. Speak to me then a little bit, in the family office model, the multifamily office model, the family office services that you provide. Obviously you guys have estate planning in-house, tax planning in-house. Is there anything that you still refer out to partners?
Yeah. For? The main things that we still refer out. So we have a network of service providers who work with clients. We get them preferential pricing and access. But for example, we've had to help extract clients from tricky situations internationally, right? So when the war started in Ukraine, for example, we had to help extract a client. Similarly, we had to help get a client out of Israel when the conflict started there. And in those situations, we contract with security firms that do the actual client support on the ground in those countries. We obviously, are not a place where we have kind of security professionals in every country. And then similarly, on some of the cybersecurity protocols that we help our clients with, that's another area where we will contract with different providers that we've vetted and have relationships with, depending on what the client's needs look like. But I would say, so there are a few areas, but for most of the kind of core functions you think of when you think of a family office, we are providing those directly for clients.
Yeah. And when clients come to you, are they coming to Cresset because they are excited about the investment possibilities, or is it that they have these larger problems in terms of just family wealth planning, legacy, philanthropy, whatever it might be?
Yeah.
In other words, where do you spend the majority of your time with your clients?
Yeah, it's really interesting. I would say that it's the population that are coming to us for family office services is a very fast growing segment. I don't know that it was necessarily always kind of the primary driver of what has brought clients to Cresset historically, although it was always an important piece of the picture. But I think what we're seeing is, as the pace of life gets more and more rapid, as what being a founder is more and more intense. I mean, I was just at a McKinsey conference a week or two ago, and they were talking about how, with everything happening in the world, this is probably one of the most challenging times to lead organizations, right? And so if you think about that, the founder in the context of that, they are incredibly busy, and having a trusted partner to go to manage parts of their life that they don't have time to manage is really something that I just we're seeing a lot of clients really embrace and realize that they need. One advisor was just telling me she was at a conference a couple of weeks ago, and somebody chased her down at the conference, a potential client, saying, "Oh, I'd been looking for you because I read about your family office services and I desperately need them." So it's definitely, I would say, a very fast growing place. But I would also tell you that our focus on investing in the privates in the private markets has has also, I think, been one of the bigger draws for people, because if you look at the wealth creation over the last decade, I mean, if you look at wealth creation overall, period, but in particular over the last decade, you've had so many company founders, company like privately held wealth creation, right? You have a generation of people who really understand why investing in the private markets is important and a really critical piece to maintaining their wealth over time. And it can be hard to figure out where to go to get help with that. So, obviously the bigger kind of wirehouse firms, they pick and choose and have, private investments on their platform, but it's not, as I said earlier, kind of the same bespoke support that you can get when your advisor can look at your whole portfolio and help you evaluate, deal flow that you find other places. And so that has also, I think, been a reliable sort of differentiator that clients come to us for.
And do you talk to them about investing in private markets in kind of a diversified way? I mean, I think one of the issues that a lot of clients who, jump into the PE or private equity or general partner side of the thing often kind of find their allocations askew afterward.
Yes, no, you're exactly right. I mean, we have a very sizable private investment team that is broken down into, different categories that you would find. I mean, because to your point, like a lot of people get, heavy on real estate, or they get, heavy in credit, right? And so we do spend a lot of time thinking about, what that full portfolio needs to look like. And also, in the context of obviously, the broader financial picture of a given family, right? Obviously, if it's a family that maybe is pre-liquidity, on their current businesses, they may not want as heavy of a private allocation as a post liquidity family, right? So you're right. There are a lot of different factors to take into account when you're thinking about what your allocation should look like in the private markets. But certainly, and there's been so much written on it, you can't ignore the fact that 10 years ago we had 8,000 publicly traded companies, and now we're down to 4,000, and the average time to an IPO used to be, I forget, like 7 years, and now it's like 14 years. So, there's just a lot of value to be had there. And I think people who've gotten their wealth through private markets have a deeper appreciation of that than maybe what we would have seen on the average client 10 years ago.
Yeah, for sure. And to your point, there is no yet any kind of morning star of,
that's right,
private equity, right? So a firm your size can do all the due diligence for clients. I think smaller firms who are also being encouraged to go into private markets for their clients maybe have like a harder time.
That's right. And the other thing that's hard is that it's oftentimes it's a scale play, and that the best opportunities want you to write sizable checks, right? And so kind of finding the opportunities that are the right size can sometimes be a bit of a challenge as well. So, but listen, I think, the good news about the world we live in is that there are always opportunities if you are aggressive in looking, and it's just a question of how much time and diligence do you have to put towards that for your and what does your client base most need, right?
Yeah. In growth mode, do you have thoughts, or anyone there have thoughts on the ideal number of clients to advisors? And the reason I ask is because it seems to me when you're moving into more of those bespoke family office services, clearly there's more personalization, more time spent with an individual client, more unique situations. So probably can't have the kind of broader mass service offering that maybe smaller RIAs can. What do you think about the ideal client-advisor ratio?
Well, it's really interesting. You're absolutely right that in a family office services, for the provision of family office services, thinking about the right team to support a client does have to be very bespoke. And, candidly, I would say there are some parts of what we include in our family office services that are relevant to all clients, right? So tax and estate planning have to be part of how you think about financial planning and the overall allocation of assets for a family. So those things are always sort of present for a given family. But then, some families really want, an outsourced CFO who's making sure that they have complicated trusts or, multiple generations, and they want to make sure that, everything gets accounted for and allocated appropriately. Other first generation families, it's the founder and their spouse and 2 kids, and it's pretty straightforward, and they don't need a partial CFO to manage things for them, right? So maybe they just want bill pay, or, maybe they don't want any of it. And so what we have found is that, you really have to staff to the need at this, and when you're in this space, and you're right, there is no kind of clear ratio because, I would say this, I think that the number one lesson I have learned about working with, these amazing clients that we get to work with every day is that everything has to be bespoke to what that family needs, right? So we're working with people who are trying to delegate and outsource parts of their day-to-day financial lives to us. And so we have to rise up and meet those needs and anticipate those needs. And, just like every family is different, every client is different. So the staffing of that is pretty bespoke. And you can sort of make sometimes generalizations of like, okay, a heavy user will need this many hours on average. And, this is kind of the number of people we need to staff accordingly. But it's very, you can't just predict it when a client walks in the door. It requires a lot of conversations to figure out what that looks like.
Yeah, no, for sure.
Yeah.
And I don't mean to suggest that the only thing you do is family office services. But I am aware that even with high net worth clients and maybe lower end, upper net worth clients, there's vague differences, right? It gets blurry and gray. And I'm sure you all have a client segmentation strategy of sorts.
Yeah, I mean, so I think, as I said, like the way that we think about it is that there are certain parts of working with clients that are, if you're going to advise on their assets, that, you have to help provide those clients with, right? So thinking through those tax and estate elements, or, understanding their insurance situation at a high level, those types of things. And then, what I would say is any client can have family office services. It's just, what that pricing structure looks like is dependent on the full picture, which can have family office services and investment advisory pieces to it.
I know we're running out of time here. I'm going to get the hook from our producer in a second, but what next for Cresset? I mean, is there something that's on the horizon that you and the team are looking to bring on board, or a new service offering to enter, or some new a team to bring on board? What's the
one? Cresset is always been guided by what is best and right for clients. And as we look ahead at what is best and right for clients, we see that scale is going to be an important part of what allows us to get the best pricing for clients, what allows us to get incredible access to private investing opportunities that nobody else has. It's going to be what allows us to continue to be best in class as we are today on cybersecurity. Investing in AI is going to be transformative. And so we will continue to grow with our clients. I would say we're in a very fortunate position, and I'm knocking on wood here if you can't hear it. We have a very well-positioned balance sheet. We have a very well-positioned organization. And so, as we look ahead in the coming, few years here, even in a time of uncertainty, we are positioned for, a number of areas that we think we can continue to grow, including family office services, as we discussed, including continuing to invest in our technology and our platform. And we will be open to, potential, hiring of advisors or M&A activity to the extent that we think it's culturally a fit for us. Unlike a lot of firms, we don't have targets that we go after. So we really just look for where is the right culture fit. And if we can find that, then those are the ones we get excited about. But we don't really have a target per se. I will say that there's a lot of research that shows, should we head into a mild recession here and should we face some headwinds, that the ability to invest in an organization during downturns is one of the things that really allows companies to leapfrog in terms of their long-term success. And it makes intuitive sense, right? Like if you can invest in a time where other people aren't, you get better pricing. There's more talent in the market for you to go pick from, right? So you're, the research shows that the investment you make in a downturn, even if you make the same dollar investment in a more prosperous time, you get a much higher return when you can invest through the cycle. So just like we tell our clients, we're going to be investing through the cycle. We're well positioned to do it. And we certainly hope that the, economy stays strong and bounces back from all this uncertainty. We're going to continue executing and delivering for clients just as we always have been.
It's been fantastic. Susie Cranston, Chief Operating Officer and President of Cresset. Thanks very much for joining us on the RIA Edge podcast.
Oh, David, thank you so much for having me. It was a real pleasure to get to connect, and I look forward to hopefully connecting again soon.
Absolutely. Hope so. And thank you for listening.
Schwab Advisor Services is a proud supporter of the RIA Edge Podcast and independent financial advisors like you. When it comes to your independence, Schwab Advisor Services is all in. They provide industry-leading custody services with no AUM minimums, no custody fees, and digital onboarding for starters. With Schwab, you'll be backed by some of the most passionate folks in the industry with over 35 years of experience helping firms of all sizes. To learn more about everything Schwab can do for you, visit advisorservices.schwab.com.